$320 billion. That is how much money now exists in stablecoins. In 1 year, that number grew 30%. In 2025 alone, stablecoins processed $46 trillion in transactions. That is 20 times PayPal and 3 times Visa. But here is the question every CFO is asking in 2026. Should stablecoins be on your balance sheet? And if so, where? This is the Faceless CFO. Today, the most under-discussed corporate treasury question of 2026. Stablecoins, the accounting reality, the yield opportunity, the risks, and my actual recommendation for SMEs. First, what is a stablecoin? A stablecoin is a digital token pegged one-to-one to a stable asset, usually the US dollar, backed by reserves. Tether, ticker USDT, has $186 billion in circulation. USD Coin, ticker USDC, has $75 billion. Together, those two control 89% of the entire stablecoin market. You send a stablecoin in under a second for less than a cent. Compare that to a credit card transaction, days to settle, or a Swift wire, days to clear with multiple fee layers. Stablecoins are not just faster. They are a different category of payment infrastructure entirely. Now the big question, are they cash? Or are they not cash? This is where the accounting world has been wrestling for 2 years. Under current USGAAP, stablecoins are not classified as cash or cash equivalents. They are typically treated as financial assets or intangible assets depending on the redemption rights. But that is changing. The Financial Accounting Standards Board, FASB, voted in April 2026 to propose that companies disclose significant stablecoin holdings as part of cash equivalent disclosures. The pathway to true cash equivalent treatment is being built. The Genius Act, signed into law July 18, 2025, created the first federal regulatory framework for payment stablecoins. It requires one-to-one reserves, backed by US dollars, short-term treasury bills, or government money market funds. Issuers must publish monthly reserve composition reports certified by the CEO and CFO. This is real corporate infrastructure now, not crypto cowboy nonsense. The yield opportunity. Here is what most CFOs miss. USDC reserves sit in the Circle Reserve Fund, a BlackRock managed money market fund, currently yielding 3.56% annual. That yield does not flow to USDC holders. It flows to Circle. But the next generation of stablecoin products, like SUSD and BUIDL, do pass yield through to holders. BlackRock BUIDL alone has $3 billion in tokenized money market supply. JP Morgan, Fidelity, State Street, and Morgan Stanley have all launched competing products in 2025 and 2026. This is no longer fringe. Wall Street is building the infrastructure for corporate stablecoin treasuries. A recent survey found 13% of financial institutions currently use stablecoins. 54% of non-users plan to adopt within the next year. Citi projects the stablecoin market will reach $1.9 trillion by 2030. Bull case, $4 trillion. 5 use cases for stablecoins on a corporate balance sheet. Number 1, cross-border payments. International payroll, supplier payments, and remittances settle in seconds at near zero cost. For SMEs operating across multiple countries, this alone can save tens of thousands annually in wire fees. Number 2, treasury yield. Hold reserves in a yield-bearing stablecoin product and earn 3 to 5% annually versus 0% in a traditional business checking account. Number 3, 24/7 settlement. Banks close on weekends and holidays. Stablecoins do not. Cash management becomes truly continuous. Number 4, programmable money. Smart contracts can automatically execute payments based on conditions, delivery confirmation, escrow release, milestone-based vendor payments. Number 5, emerging market access. For companies operating in markets with banking constraints or currency volatility, stablecoins provide dollar access without traditional banking friction. Now the risks. What every CFO must understand before adopting. Risk 1. DPEG events. In May 2022, Terra USD collapsed from $1 to 0 in 3 days. In March 2023, USDC briefly dropped to 88 cents during the Silicon Valley Bank crisis because Circle held $3.3 billion at SVB. Stablecoins are not risk-free. Risk 2. Counterparty and reserve risk. The stability depends entirely on the issuer's reserve composition and operational integrity. Tether has faced persistent transparency questions for years. USDC publishes weekly reserve reports. Choose your issuer carefully. Risk 3. Regulatory risk. The Genius Act provides U.S. clarity, but Hong Kong, Singapore, EU, and other jurisdictions have different rules. A multi-entity company faces overlapping compliance regimes. Risk 4. Operational risk. Custody solutions, private key management, transaction errors that cannot be reversed. A wire error can be clawed back. A blockchain transaction cannot. Risk 5. Accounting and tax complexity. Until FASB finalizes the cash equivalent classification, and until IRS guidance fully matures, stablecoin transactions add reporting complexity that many SMEs are not equipped to handle. My honest CFO recommendation for 2026. For most SMS, cautious experimentation. Allocate 1 to 3% of Treasury to USDC for cross-border payment use cases. Build the operational muscle. Learn the workflows. Do not chase yield until your accounting infrastructure is ready. For companies with international operations, particularly in emerging markets, stablecoins are becoming essential infrastructure. The cost savings on cross-border payments alone justify adoption. For companies considering yield, wait for the regulated products. BlackRock BUIDL, Fidelity Reserves, Digital Fund, State Street's Genius Act-aligned products. These provide institutional-grade yield with proper accounting and custody. For everyone, pick USDC over USDT for corporate use. Better transparency, better regulatory posture, better fit for institutional accounting standards. Stablecoins are no longer a crypto curiosity. They are the new financial rails being built underneath corporate treasury. $320 billion in circulation, $46 trillion in annual volume. Wall Street building the infrastructure. The question is no longer if, it is when and how. If this opened your eyes, hit subscribe. New videos every Tuesday and Friday. Drop a comment. Has your company explored stablecoins for treasury or payments? I read every comment. Next video. How to negotiate your CFO compensation package. See you there.